The level of misinformation and straight up lies being used to sell indexed universal life insurance on social media right now is absolutely mind-boggling. It's gotten really bad.
So I sat down with a client today. So I sat down with a client today, and she said, I'm tired of putting money into my 401k.
All of the empty promises being used to sell IUL have the potential to ruin people's financial futures. On one hand, I'm actually impressed by the amount of BS that this guy was able to squeeze into a single 40-second Instagram clip and its caption. We're about to straight up dismantle this thing because it is atrocious. So if you already have an IUL or are thinking about getting one, you're going to want to watch this so you don't get burned like myself and countless others. Let's get into it. What's up, y'all? This is Ian with Freedom Flow Finance and IULRehab.com. And as I do more and more IUL evaluations, I'm running into a staggering number of indexed universal life insurance policies that are extremely problematic. And I'm not the only one. Even people who sell IULs will readily admit that there's an issue.
I've been doing this for 3 years. I've done my niche is doing policy audits. So I find people that have these policies already in force and I solicit to them. I've done over 400 plus policy audits, and out of those 400 plus, I've come across 12. It's 12 done right. 97% of the policies out there are what I do refer to as the prime Americans like to call it, trash value life insurance. And I can understand why the product gets such a bad rep when it's so misrepresented.
Okay, so let's take a step back. What does it mean when a policy isn't done right or problematic, as I said? It's not that the IUL won't do what it's supposed to do. It's that the people buying the product think that it's going to do something that it's not going to do. An IUL that is problematic or wasn't done right is likely never going to perform as well as it was presented when the person purchased it. The sad truth is that many people are buying indexed universal life insurance policies with unrealistic expectations of how that policy will perform. There are thousands of people across our country who are faithfully paying into an IUL, thinking that there's going to be an amount of money there in the future that will not be there. People ought to know the truth about what they're buying, and they ought to know about the unethical sales practices being used to sell IULs. Austin, this is not personal. I understand that you're just one of many people who are selling IULs this way, but you're profiting by setting up your clients for failure in the future, and that's not right. Someone posted one of Austin Becker's Instagram posts in a group chat that I'm a part of, and after watching it, I was completely shocked. So much so that I felt compelled to leave a comment on that post. You're going to want to stick around to see how that all played out, and I'll get to that in a little bit. There's just so much misinformation packed into this thing. First, we're going to watch the video, then I'm going to break down the video, and then I'm going to break down the caption to the video, just so we can cover it all. Let's check it out.
You're supposed to use life insurance while you're alive.
It's called life insurance, not death insurance. Let me show you why. So imagine your life insurance policy is a house. You see, every time you make a payment on your house, you build equity in the house. You can then use that equity for whatever you want by getting a home equity line of credit. See, but life insurance is way better. Check this out. With life insurance, when you put money in, you build equity in the form of cash value. That cash value is guaranteed to grow 100% tax-free. The money's protected against judgment and lawsuit in most states. You can access the cash value at any time for whatever you want by taking a policy loan. But unlike your house, there is no credit checks required. There's no financial statements required. Unlike your house, there's no repayment terms required. You could take the money and buy a car, go on a vacation, or do an investment to make more money. And the whole time you're doing this, you're not interrupting your guaranteed compound growth.
All right, so one of the main reasons this video caught my attention is because the gentleman in the original video is Mr. Burr. Big shout out, Mr. Burr. I love your content. Mr. Burr is a real estate investor, an infinite banking practitioner, and a content creator. He's got his own YouTube channel. And as you can see, he's not a big fan of IUL.
Infinite banking is all about control with zero risk. IULs have risk. Whole life insurance policy, if it's structured correctly, zero risk. Your money only goes up. It never goes down. So again, guys, IULs should never be used for infinite banking.
Mr. Burr has been in the game for several years and has set up hundreds of infinite banking policies for people. It's pretty clear that Mr. Burr does not think IUL should be used for infinite banking. But what does he think should be used for infinite banking?
You have the ability to lose money in an IUL. Whole life, never, ever, ever can that happen. So that's really a big difference right there with an IUL and whole life.
So that means that in Austin Becker's Instagram post, he uses a clip from someone who is strictly opposed to using IUL for infinite banking to sell IUL for infinite banking. Using Mr. Burr's content to sell IUL is a complete and total misrepresentation of everything I've ever heard Mr. Burr say. But for the sake of argument, Mr. Burr does not specify whether or not he's talking about IUL or whole life in his post, because they're both forms of cash value life insurance. I get it. It's the internet, things happen, and I like to give people a benefit of the doubt. But that all went out the window when I read the caption. The video is what it is, but the caption is where the real lies start. And I'll let Mr. Burr address the first line of the caption.
Bottom line is an IUL should never be used for infinite banking. It just will never work, guys. It has not stood the test of time and it will not stand the test of time.
It is just so ironic that of all the clips on the internet that he could have used to sell IUL, he chose a clip of Mr. Burr. In the description of this video, there are 5 benefits listed, and I'm going to address each of them individually. The first benefit says they will average 6 to 10% rate of return with guaranteed protection from stock market crashes. This means they will never lose money. In my experience, this is where I see IULs being most commonly misrepresented and where the greatest amount of unrealistic expectations are set. The high rates of return used on IUL illustrations can look great on paper, but the reality of what an IUL actually does is often quite different.
They illustrate the non-guaranteed side with fictional numbers of it illustrating at like 6%, 7% every single year, which we know does not happen.
Not going to happen. They assume every year is a positive year.
Which doesn't happen. The market goes in cycles, right?
Land.
We all know that the market does not go up every year. This means that the growth and projected income on an IUL illustration is based on impossible assumptions. The truth is, IUL illustrations would not look as good as they do without those faulty assumptions.
It's not that an IUL can't work, because in a vacuum, it can, right? It's just that 99% of the time it won't work, right? So I ask you, is if you have a 99%, if you knew you could get on a plane and it was a 99% chance it was going to crash, would you get on that plane?
Heck no.
Hell no.
Not a chance.
Not a chance, right?
Okay, so I know that saying 99% of IULs will fail sounds a bit dramatic, but consider these 3 points. Point number 1 is just common sense. What's the likelihood that an insurance company, which is a for-profit business, is going to reliably and consistently make you greater returns than it's going to get for itself? The profitability of the general fund of most life insurance companies is anywhere between 3.5% and 4.5% rate of return per year. So if the massive insurance companies, which are some of the best money managers in the world, are only realizing a profit of 3.5% to 4.5% per year, what's the likelihood that they're going to get IUL policyholders 6, 7, 8% reliably long term? Think about that. Logically, it just makes no sense. Which leads to the second point. IULs were invented in 1997, and since that time, there have been hundreds of thousands of IUL policies sold across the United States. And for the last 15 years, our economy has been on the greatest bull run the market has ever seen. So if IULs are really able to capture that upside potential and have that downside protection, we should expect to be seeing a lot of IULs that outperformed their original illustrated rate. But the truth is, most IULs are underperforming their original illustrated rate, even with these favorable market conditions. Over 2 years ago, Chris Kirkpatrick started the IUL Challenge, and the premise of this challenge is that he will give anyone $2,000 if they're able to present him with an IUL that's been in force for over 10 years and is beating the original illustrated rate. Up to this point, no one has claimed the prize. Like I said, it should be easy to find IULs that have beaten their original illustrated rates. People selling IULs should, by all means, have a plethora of examples that they can point to of older policies that are doing really well. But where are they? I certainly haven't seen them. There probably are a few policies out there that outperformed their original illustration. But how many? That number's got to be incredibly small. And the third thing to consider is this. Since the year 2015, there have been 3 different pieces of regulation that have come out aimed at curbing the aggressive illustrations used to sell IULs. AG 49 in 2015, AG 49A in 2020, and AG 49B in May of 2023. Why would government officials make multiple regulations to rein in the rates used to sell IULs? Do you think they just did that for fun, or do you think that they were seeing a problem as well?
I got news for you. Like, in a vacuum, IUL can work, but if after looking at all the facts and all the moving parts of IUL, and when you look at that, if you still believe it, you probably also believe that unicorns exist and can fly and all these things, right? So
I used to believe that when I was 5.
I think the point here has been made. There's a lot of reasons pointing towards the fact that the illustrated rates on IULs are simply too high and unrealistic. The second part of the first benefit says that you cannot lose money in an IUL, and that is one of the biggest lies currently being used to sell IUL. To debunk this, I'm going to defer to Bobby Samuelson. He's been in the life insurance industry for many years, and he's considered to be one of the most knowledgeable experts in the field. I think of him as the master Yoda of life insurance.
One of the marketing pitches for IUL is you can't lose money. That is absolutely not the case. You are guaranteed to lose money. Every time the market goes down, you get a 0% credit. Policy charges still come out of the account value. The account value will decline. You will lose money that year. And the amount of money you lose is going to be exactly equal to the amount of policy charges coming out of the contract.
You can absolutely lose money in an IUL. And the risk of losing money in an IUL only goes up as the policyholder gets older and the cost of insurance increases.
As you get older, you are more expensive to insure. So literally in an IUL, every single year, your cost of insurance goes up, and the older you get, it goes up exponentially.
When I was being taught to sell IULs, I was told that anytime somebody brought up the issue of the increasing cost of insurance, that all I had to do was point at the illustration and say, hey, this policy is going to grow faster than the increasing cost of insurance, so you will always be making money. Unfortunately, that's simply not true in most cases, and the policy only grows that fast because you're using an unrealistically high growth projection.
I've done videos that break down illustrations that show they always say you can't lose due to market loss, but you can lose because of market loss, because of these other moving pieces and fees and expenses and charges inside of the policy. You can lose 10 to 20% on a 0% year in the market.
Right.
When you're in retirement. That's mind-numbing, right?
Another thing that's rarely mentioned is the fact that universal life insurance policies have a history of underperforming.
So when you kind of stretch back and look over history, UL was popular in the 80s because it illustrated very aggressively. People thought they were buying a cheap product. What they didn't realize was if interest rates go down, their premiums must go up. That's not what the agents told them. That's not what the expectation was, but that is how the product actually works. So again, even with UL in the 80s, there's a difference between the marketing story and the illustration story and how the product actually works.
The bottom line is, if someone tells you you can't lose money in an IUL, they're absolutely lying to you. They may not be aware that they're lying to you, but it is simply not true. I mentioned earlier that I left a comment on that Instagram post of Austin Becker's that we looked at earlier. In that comment, I pointed out the fact that you can lose money in an IUL, and I explained it very clearly. So I went back the next day to see if there was a response to my comment, and found that my comment had been deleted and I had been blocked. Now, I don't care about being blocked by someone I would never follow, but I do care about someone intentionally shutting down open dialogue and hiding the truth. This is an example of blatant censorship, and Austin Becker withholding the truth from his potential clients could have serious consequences for people. I would personally much rather have an open conversation with someone than have to make an entire video calling out that person's lies and BS. But I believe the truth matters, and I believe informed consent matters too. It's super important. If you agree with me, go ahead and leave a comment below. I'd love to hear what other people are thinking about this. The kinds of products that Austin Becker is selling have the potential to have a major impact on someone's financial future. I recently did a video addressing the question around life insurance being a scam. And what this guy is doing by intentionally deleting comments and hiding the truth about IUL is the definition of a scam. To be clear, life insurance itself is not a scam, but it can be used to mislead and scam people. What Austin Becker and people like him are doing with this sort of misleading messaging has the potential to hurt people and makes our entire industry look bad. The bottom line is, IUL is a permanent life insurance contract and should be looked at as a lifelong commitment. So please, do your due diligence and research when it comes to life insurance. And that's not just universal life insurance or indexed universal life insurance. That includes term and whole life as well. Make sure you know what you're getting into before you purchase the product. When you sign on the dotted line, you're taking responsibility and saying, I understand what it says in this contract. Knowing exactly what you're getting into is the only way to prevent yourself from getting an unwanted outcome. That was an awful lot of untruth in just one benefit. Let's move on to the second benefit. They can access their money tax-free at any time in their life with no penalty. I'm going to defer to Mr. Burr again to handle this one.
There's surrender fees that are crazy high with IULs. Why do you think the surrender fees are so high? It's because the agent makes a ton of commission. The insurance company needs to make up for all that ground by not giving you access to your cash value early on. So they give huge surrender fees for like 10 to 15 years.
The IUL that I bought had surrender fees for the first 15 years of the contract. Sure, you can borrow against the cash value of an IUL. But IULs that are target funded or below typically don't have cash value accumulation until year 4 or 5. And you can't borrow money that isn't there. But remember the clip of that IUL expert from earlier in this video. By his own estimation, 97% of policies are not set up that way. Why is it that so few indexed universal life insurance policies are set up or funded properly?
The fact of the matter is, if there is an agent out there telling you that an IUL should be used for infinite banking, what they are doing is they are trying to sell you on something that pays them more commission. IULs pay a ton of commission, but they should never be used for infinite banking. The person trying to sell you that doesn't understand how infinite banking works.
The reality is that a properly structured and max-funded IUL pays far less in commissions to the agent who sells it. And I did a full breakdown of this conflict of interests in the webinar that I created called IUL Deconstructed. In that webinar, I used the IUL that I purchased as an example and show all the different ways that these policies can be troublesome. Follow the link in the pinned comment or the description below to get access to that webinar and learn everything you need to know about an IUL. All right, so moving on to benefit number 3. They have uninterrupted compounding growth. That is what allows them to become their own bank, infinite banking. They can borrow the cash in the policy without interrupting the growth to leverage for business, investments, personal use, etc. Come on. So in a year when the market is down, you're not technically losing money in the market, but the cash value of your policy is going down because policy charges are getting deducted from it. So for that statement to be possible, in order to experience uninterrupted compounding growth, we would have to have positive years in the market forever. This is not just wrong, it's the opposite of reality. With an IUL, you cannot experience uninterrupted compounding growth. Am I missing something here? Are industry experts like Bobby Samuelson missing something? Go ahead and leave a comment below. I'd love to hear your thoughts on it.
Index UL really doesn't work for independent banking at all because the cost of the loan compared to the credit is going to swing around like crazy. With IUL, you're hitting caps, you're hitting floors. And if you don't build in a lot of buffer of equity in the contract, you may end up accidentally lapsing your policy and having a big phantom income tax bill. So IUL to me is fundamentally incompatible with IBC because it's too volatile.
So what Austin Becker is doing in his Instagram post is using qualities of whole life insurance, including stability and true uninterrupted compounding growth, to sell an entirely different product, IUL. All right, so let's get into Benefit number 4. They will have a tax-free retirement income that they can turn on and pay them for the rest of their lives. Not only is this post misleading, but grammatically, it's a bit sketchy. Let's look at a different video of Austin Becker's. I'm going to use this other video to demonstrate how incredibly misleading it is to say that an IUL will produce tax-free income in retirement.
How to retire with $100,000 per year tax-free. So here we have a 40-year-old non-tobacco male putting in $1,600 per month into his IUL. That'll equate to $19,200 per year going into the policy. And when he's 65, he'll have roughly $100,000 per year tax-free, assuming a 7.23% rate of return inside of his IUL. You'll see by the time he's 65, he will have put in $480,000, and assuming that 7.2% return, he would have $1.098 million in cash and $1.46 in death benefit, roughly. He'll then start taking distributions of $101,000 per year from the cash account, but the account value is still indexed and still compounding over time, keep going up. What that does is it lets it replenish and keep replenishing, and so by the time he's 90, the total distributive amount would have actually been $2.5 million based off of a $480,000 contribution. These policies can be designed for anybody who's healthy, and it can be designed for whatever contribution makes sense for you and your family. Link in bio for consultation.
All right. So we already know that the 7.23% used on this illustration is extremely aggressive and very unlikely. Government regulators tried 3 times, unsuccessfully, to prevent people from doing what he's doing.
The problem is that clients go in, and you and I have seen crazy stuff. People borrowing money against their house, taking money out of 401ks to buy IUL under the idea that this long-term performance will be there. The problem for them is that they went into this deal thinking they were going to earn 6, 7, 8%, and they actually end up earning 3, 4, 5%. And that now their whole financial plan is wrecked.
I punched the numbers that he's using into a compound interest calculator that I found on NerdWallet. It's easily accessible for anybody. $19,200 over 25 years at a 7.23 rate of return will get you $1.34 million. $19,200 at a 5% rate of return for 25 years will get you $962,000. Lowering the rate of return to a much more reasonable 5% drops the cash value of this policy at 25 years by almost 30%. The only reason that the illustration he's showing works is because of an unrealistically high rate of return and uninterrupted compounding growth every year, which we all know is impossible. What do you think is going to happen to the amount of money distributed in retirement if the cash value is actually 30% less than what was originally projected? That $101,000 annual distribution that starts in year 65 of the original illustration, that's over 9% of the cash value at that year. The only way a 9% distribution works on an illustration like that is if you're assuming growth every year. I could do a whole video on that second clip of Austin Becker's that we just watched and break down how utterly impossible it is that what he's saying will actually come true. Ultimately, the people who really suffer are the clients who buy these IULs expecting one outcome and getting something very different. With the amount of variables baked into indexed universal life insurance policies, I just don't see how anyone with an IUL can plan for their future and retirement in a meaningful way.
The danger is on the illustrations and the way that these things are being illustrated and the performance being shown to clients. That is where the issues are. Think about all the ways that these products are being marketed on TikTok and whatever else. It all relates back ultimately to this aggressive illustrated performance being shown to clients, which creates aggressive expectations of future performance that they may not get.
Speaking of TikTok, Austin Becker has over 400,000 followers on that platform alone. And every day there are more and more people getting on social media with the exact same message, spreading the exact same lies and misinformation about a product that has no long-term history of success.
97% of agents that sell this product are doing it because they see the illustrated performance. They see people making a lot of money selling it. They understand the basic positioning, which is, and none of these things that I'm about to say are true, but what they say is you can't lose money. You're going to perform better than equities. You're going to, this, super safe insurance company, long-term history of performance. None of these things are actually, maybe the insurance company piece, but the rest of it's not true. And so tax-free guaranteed income, I mean, I've heard that story for the IUL, and that's like factually incorrect.
Up to this point, using IULs for tax-free income in retirement is a myth. These policies didn't really become popular until 2009. Given the fact that indexed universal life insurance policies only got popular in recent years, how many people are actually using them for income and retirement right now? Go ahead, do your own research. I encourage you to go out and try to find actual people that are using IULs for income and retirement. Yeah, it works on a spreadsheet, but what about the real world? Remember the IUL challenge? It's been going for 2 years and nobody's claimed the $2,000 prize. Using indexed universal life insurance for tax-free income and retirement is a financial experiment, and everyone with an IUL is a guinea pig. On to the last benefit. They will be protected with a permanent life insurance death benefit to protect their legacy and create generational wealth. This is incredibly misleading. Although indexed universal life insurance is considered permanent life insurance, it's really not. And to prove it, I'm going to quote straight from the Universal Life Insurance Model Regulation. Although highly flexible, universal life insurance is generally considered a permanent life insurance plan. Most companies encourage a premium level which will provide lifetime insurance protection. NAIC UL Insurance Model Regulation, page 5. So it's generally considered permanent life insurance, and most companies encourage a premium level that provides lifetime insurance protection, but not necessarily. What that ambiguous wording means is that if the premium level for a universal life insurance policy is not sufficient, it will not last your entire life. Most people purchasing IULs have no idea that if the premium levels that they're paying are too low, their policies could lapse even if they make every scheduled payment. I go into way more detail about this in the IUL Deconstructed webinar linked below. Think about it. IUL came out in 1997, so there should be thousands and thousands of people across the country who are permanently protected. But where are those people? I mean, really, where are they? It should be easy to find people who are using their IULs for income and retirement. What's more likely, that those people all entered the witness protection program, or that they realized that their policies were underperforming and bailed on them early? And no policy means no generational wealth. Why would someone keep an underperforming policy with a low probability of creating the generational wealth that the person was promised initially? This last paragraph isn't even listed as a benefit, yet is still incredibly misleading. There are no requirements to properly structure or fund an IUL. That is typically up to the discretion of the agent who writes the policy. And we've already heard from an IUL agent who's an expert, and in his experience, he said that 97% of the policies that he looks at are not structured or funded properly. And we already know that agents selling indexed universal life insurance get paid more to set up target or underfunded policies. It's not hard to connect the dots here and see why so many policies are underfunded and bound to underperform. It's really the Wild West. There is no one out there ensuring that these policies are set up and funded properly. Thankfully, there are a small yet growing group of people who are sounding the alarm bell.
You don't own a universal life insurance policy, do you? If you do or invest in the companies that offer them, then you must learn why my research suggests that over 90% of them will lapse and why the stocks and bonds of these companies might be worthless. These policies are sold as permanent, but are anything but permanent. These policies are designed to target funding where the advisors and the insurers maximize their commission, but leave a poorly funded policy destined to lapse from the issue date.
If you're thinking about buying an IUL, I highly recommend that you read the book Lapsed by Elon Moas. In it, he breaks down in great detail why the majority of these policies are bound to fail. Based on everything we've covered thus far, I would strongly advise you not to comment bank below. I think it's only fitting to let Mr. Burr have the last word when it comes to indexed universal life insurance and infinite banking.
Bottom line is an IUL should never be used for infinite banking. It just will never work, guys. It has not stood the test of time and it will not stand the test of time.
Look, there are a lot of people out there making a lot of money by misrepresenting this product and lying to sell indexed universal life insurance. And those people aren't necessarily bad. They may very well believe what they're saying. In many cases, people lying on social media to sell indexed universal life insurance are just repeating what their uplines told them, who just repeated what somebody else told them. Trust me, I saw this firsthand getting recruited into WFG and learning all the talking points that were taught to me in that system. And I talk more about that in this video right here. Misleading social media posts being used to sell IUL isn't the problem. It's just a symptom of the problem. These scammy sales tactics are like a piece of rotten fruit that's attached to a rotten branch, that's attached to a rotten trunk, that's being held up by rotten roots. Austin Becker is selling IULs for a company called Family First Life, or FFL. Come on, FFL. There has to be somebody in the upper management of these companies who understands what I pointed out in this video, yet is doing nothing to stop it. Furthermore, FFL is contracted to sell life insurance from companies like National Life Group and F&G. There has to be people at these big insurance carriers who understand that their products are being misrepresented and yet are doing nothing to stop it. Beyond that, there are well-paid government regulators whose job it is to protect consumers from predatory sales practices. There has to be people within the NAIC and other regulatory bodies who understand the problem with IULs, yet are doing nothing to stop it. There are literally thousands of people just like Austin Becker who are getting plugged into a fundamentally corrupt system. That being said, when working with a product as important as life insurance, it's absolutely critical that agents understand the products that they're selling. If an agent realizes that the agency or IMO that they're working with uses shady or abusive sales tactics, it's that person's responsibility to do something about it or leave. In the context of life insurance, looking the other way when you see something that's wrong or making excuses for bad behavior will ultimately have terrible consequences for someone down the line. If you're an agent currently working for a company or agency that uses aggressive sales tactics, or if their policies are out of integrity, feel free to contact me and I'll share any resources I can to help get you out of that situation. Go ahead and share this video with anyone who you think might get value from it. And be sure to like, share, and subscribe if you got value from it. If you already have an IUL and want to make sure that it's not going to blow up on you later on in life, follow the link in the pinned comment and description below. If you're interested in learning more about the infinite banking concept, and if a specially designed whole life policy is right for you, there's a link in the description for that as well. I also have links to all the videos that I used to make this video in the description below as well. And until next time, take care and be well.